Oh my god, spot on once again. Remember, I was calling that there is a high chance that the US Federal Reserve will hike interest rates all the way to a potential 4.5% this year. And apparently now, based on what we are seeing from what Jerome Powell shared during his Q&A session, that is very possible. So the question is this: is it time to head for the hill? So I will share with you more in detail very shortly, but once again, disclaimer apply as usual, and thank you AIMS for all the kind sponsorship. Now, over the last 3 weeks, I have been repeating that there's a very good chance that we're going to see the interest rate going up. And last week, and in fact yesterday, I already said that there's a very good chance there will be a 75 plus 75 basis point rate hike. And all this information are already on my YouTube channel. So if you have not seen all this past video, take a look at it. You will see some good stuff over here. Now, if you remember, this is what I wrote there. I believe that the yield will be going to 4.5%. And that was mentioned yesterday before the FOMC meeting. Now, what happened? Federal Reserve raises rate by another 3/4 of a percentage point, pledges more hikes to fight inflation. Now, the current inflation is getting very worried, and of course, people are saying that the Federal Reserve need to do more. And now the thing is this: based on the Fed official, they signal that there is a chance of continue hiking until the fund level hits the terminal rate or endpoint of 4.6% in 2023. Okay, so the message is very clear. He has not changed anything since the annual symposium in August. He is saying that the FOMC is strongly resolved to bring inflation down to 2% and will keep it until the job is done. So with the current CPI data at 8.3%, it's going to really need to bring the interest rate all the way to maybe 4.5 to even 5%, because that is really the only way that it can drive down inflation. And of course, with all this thing itself, we can see that this is the FOMC participant assessment. Now, do note, yesterday it was unanimous. Everyone was all calling for a 75 basis point hike. Okay, all the officials. Okay, so now based on the latest stats, they are now looking at the numbers to be between 4 to 5%. Okay, 4 to 5%. Let me just bring this up for you a little bit, because I think you can't see the dates properly. Here we go. All right, so this is what we have now. By year 2022, the dot plot is about 4.5%, and by next year it's all right. Most of them are looking at least 4.75 to potentially 5%. It's only 2024 whereby they expect the inflation to come down, and then they are looking at a vary of between 2.5% to 4%. So you can see that, right? This is pretty. Everybody is having their own views here, but what is the consensus here is that majority of them are still looking at this 4.5 to 5%. All right, so that shows that the Fed officials are pretty unanimous in this view. And of course, if that's the case, what will happen now? Because now the GDP growth forecast now has slumped to just 0.2% for 2022. Now this is really bad, because the last 2 quarters we already have negative numbers, and now if we add them together itself, right, they are expecting a flat number. So imagine if the GDP growth is actually below 1%, then the stock market, we should see a little bit more pullback, right? And that's the reason why I felt that you must be careful moving forward. Yeah. Now let's just go through what happened last night. Okay, it was pretty flat as usual. Then when Jerome Powell when the news came out and talk about that 75 basis point, yes, indeed, there was initial sell-off. Okay, I mean, undeniable when you have the market thinking that could be 50 basis point, ridiculous. It happened, so the selling came in, the robots came in to sell. Okay, then what happened? All right, Jerome Powell had to accept some of the questions, and not too bad. He actually says certain things that actually make people happy. He says that, right, well, we're still looking at this, and we're watching the numbers, and we're not going to do this, not going to do that. So the market feel like, okay, we have a 75 basis point, but seemingly it should be fine. So the market went in and buy back again. All right, so in fact, it went above where it started selling. But when Jerome Powell asked this question, is the 4.6 terminal rate a confirmed possibility by next year? Oh my goodness, that is where it went all wrong. Okay, what is the terminal rate? The terminal rate is the spot where the federal fund rate is expected to climb before they are trimmed, or raised to 4.4% for 2022 from an estimate of 3.4% in June. Alright, the rate is projected at 4.6% for 2023, up from the current 3.8%. So what I'm trying to say by Jerome Powell is that, look, okay, that means that now you're still, although now we're now at 3.75, it's still not enough. There'll be another potential 1 more percent. And of course, think about this. If the market is going to keep on having this interest rate coming in, cost will increase, definitely the dollar will be continue going up. There will be a what they call a big problem. And truth be told itself, once that this particular answer was given by Jerome Powell, the market just collapsed all the way. The selling was huge. Look at the selling to the last this is like a 5-minute chart, right? You can see that the last half an hour, the selling accelerated. Okay, so that tells you that people are getting pretty worried right now. Now, more important is that the inflation at the moment. Now, this is the inflation numbers. Let me just show to you something here. Okay, the inflation, we hit a peak at 9.1% back then, all right? And of course, now it's coming down, but very slowly. And what can we expect? Now, the stock market has already, from its peak, has pulled back all the way to this point. And of course, from here to here is about 20%, right? That's almost there. Okay, so now the thing is this. If let's say with the hiking of interest rates, okay, and hopefully the inflation will come down, but if it come down and it's just like around this 7.5, it's still not good enough, because the Federal Reserve says that they want at least 2%. So which means that they would have to increase the rate again just to go towards there. So I suspect that it will go all the way up to 4.5 to even 5%. And what will happen to the stock market? Well, you can see very clearly the stock market will definitely have a hit, right? You can see right now. The stock market basically likely that now is at 37.89 for the S&P 500. There is a chance that you'll come down to test this technical point that you can see on the screen right now since last year. Now this figure is what would this figure be? Let me bring it to you with a chart. That'll be much better. Hold on a minute. Okay, hold on. Here we go. Okay, so you can see on the screen right now, we have a breakdown of the S&P 500. This is the short-term trend line, and it broke at this point at 39.20, and that's where the market sold off, right? Now you can understand that time we have the quadruple witching, and of course I did say that the prior to that, on this particular day, there was huge buying by the retail traders. Remember that? Yep. So now all these traders who have been buying now are now heavily hit, because all they are buying now is now in losing state, right? So I suspect that likely the S&P 500 will test 3,700. That will be the technical point of the trend line. And of course, if you look at it from the longer term, all right, you can see right now, okay, that the strong support turn resistant, it will be somewhere around here. This will be the 3,600 level. So Mike Wilson and many people all looking at 36 to 34. So my view is that based on what I'm seeing right now on the chart, there is a good chance that the S&P 500 may really need to come down to 3,600 level before it form a base. And of course, once that happens, all the previous low will be stopped out. Hence, therefore, traders should consider to get out of the market before next week, because I believe that the selling should be able to bring it down to 3,600 within the next 2 to 3 weeks time. All right, so that's my view on the market on the S&P 500. Okay, so let's look at the chart right now and see what can we offer for you for today. Okay, China A50. Oh my God, you see that? It has broken below the 13,000 figure. I told you it's a very critical figure, and it broken it yesterday. And today it's technically broke below the trend line, and it's trading at 12,870 right now. So that means that we is now very clear that you're going to test the next support level, and that will be 12,630 range. Okay, that's the support we got it from in last year, this year April, and this year April, and this year March period. It's a very strong support the market had, but now it's seemingly going to test it again. Okay. Now for the Dow Jones, well, we have very clear. We saw it. It have broke below the 30,488 level, and it's most likely going to go towards the elusive target of 29,563. Now, of course, if you look at this for the Bucks example, we had this experience before the market broke below it. The market go down deeper, and then that was where it stopped. And after that, the market rebound. And of course, the RSI at the time was already around 30, and we are also somewhere around there. So is there a possibility of this happening? Now, I don't deny that there could be a recovery stage, but the thing is that with the ongoing pain and worry, and of course the speculation, is very different from back then in June. Because in June itself, right, there was not the hawkishness by the Federal Reserve wasn't really there, but now we have. And do understand this, back then itself the inflation was at about 6 to 7%. Now we are at the high of 8%. All right, remember that. So let me just bring the chart to you. Let's take a look itself, a quick one. Okay, so you can see over here itself that this is the inflation. Back then it was here. Okay, in June period it was here. All right, so it's 8.7. Now it's 8.3. So with that understanding, I believe that there should be the possibility of the market coming down all the way to 29,563 level. And of course, if you look at the US market today using the TWB chart right now, as I shared with you, that there's a very critical level over here. Okay, and that support level will be at this 30,480, and of course the market is broke below it. Now it's going to go towards the 29,777 level. Now both KSI and KRW retain rate, so the selling pressure is definitely in the market, and plus the market is trading below the MLP right now, so selling is pretty obvious. Yeah, and of course we have a very interesting stack over here. 29,777 is a BNB minus 1 time 1 extension, and the P2 is 29,793. So that means that there's a stack here. There is a high chance the market might be pulled down all the way to that level before we see a recovery. Okay, so traders, watch out for that. Now, in terms for the Nasdaq itself, right, is now trading below the BNB support level, and that is at 11,582. So if there's a few KCB like 536, 401, 300. These are all the very strong support time being. But if the market really breaks all of them, then 11,094 will be the next figure that I'm looking at. Okay. Now both KSI and KRW is red, so again, selling is kind of expected today. Now for the S&P 500, we are very close to 3735. That is the extension figure. All right. And interestingly, the pivot 2 is 3726, so which means that we are pretty nearby. And if the KSI and KRW both are red, the chances of the market coming down is there. Now there's a KCB at 3758, and once it breaks there, 3735 shouldn't be too far away. Now for the Nikkei, let's take a look now. Nikkei is also coming off, but it is trying to find support at 27,052, which it happened to have that done. So the market has hit below and went down to 26,945, but I think the dollar is pushing up higher, and that actually lowered the yen. Hence, therefore, that actually gave a little bit of pushing factor for the Nikkei. So if Nikkei stays below 27,052, then the selling should bring it down to 26,732 level. Now, with China market is down, undeniable Hong Kong will be trading lower, and Hong Kong now is trying its best to stay afloat above the 18,011, the pivot 2 level. But with the MLP at 18,459 and the KSI and KRW both are red, there is a higher chance of the market coming down towards below 18,000. Alright, so of course, how low can Hang Seng go? Well, you can see from the chart here itself, right, we are now pretty at the low end for this year. Let me just bring it up for you. And in fact, itself, we're pretty more to the low end for the entire, for a few years already. Let me just bring to you right now. Okay, so what we have over here is about there, but not the lowest point. Oh my god. So which means that we have to go far away. Wow, my goodness. So that means that we are now at actually one of the lowest point of Hang Seng, and this could turn further downside. Okay, that's very incredible. Okay, so I just skip this. It means that the market downside is there. DAX is going to be open later on, and let's look at the crude oil, shall we? Now crude oil is basically moving downwards, and I already told you guys, if let's say the US economy is not doing well, there's a good chance that the US crude oil will have to come down. And I'm still staying firmly, but yesterday we have a new BNB, so the support level is at 82.40. Okay, so we have a bit of support just now at 82.40. Okay, if the market stays above 82.40, the market may have to test back MLP at 83.50 for the upside. But on the same note, if the market breaks below this figure at this the support at this 82.40, then the target could be as low as $78.30. Now at the moment, now both KSI and the KRW is more towards positive side, because KSI is green and there's from red to nothing, means that there's some buying interest coming in for crude oil. And I repeated saying this, I would love to buy crude oil anytime between $80 to $78. This is going to be a good buy for there. Okay, and let's look at the gold market right now. Okay, moment, let me just do something over here. Okay, there's the gold moment, please just give me just there's some in, okay, never mind. Okay, so for the gold market, let's take a look here. Okay, now gold is still coming down because obviously with the stronger US dollar, but we can see that there's a very strong base at 1660. There's a very strong base at 1660. Hence, therefore, I suspect that the market will have to hang around here. Once the market goes below 1660, then we can see selling coming down all the way to 1645. And again, in the long haul, I still believe that the goal is going to go down to 1620 first as a base, and then that is where I believe the rebound will come, 1620. And we look at silver. Here we go on silver price. Silver is trading around this area for the longest of time right now, staying above the 1920 level. So if silver is to continue, silver will most likely be able to hang around here and push forward. I still believe that silver is going to go up to $21. Okay, I'm still pretty confident on this. Yep, on silver. And last but not least, we have the Bitcoin and Ethereum. Right, Bitcoin and Ethereum, we can see very clearly that there is a very strong base support right now for this Bitcoin at approximately 18,500. Every time when it comes here itself, the market will always stage a rebound, and both KSI and KRW, both KSI is having green bars telling you the buyers are coming in frenetically, and the KCX is telling you that the selling is there. So I still think that in my opinion, we're going to see the Bitcoin coming down to 16,000, because this is how I feel it. If you take this point here itself, the high and low, which is about 3,000, if you put it back down itself, we can see something like that. Okay, so 16,000 is still my view right now. Yeah, for the Bitcoin. And last but not least will be the Ethereum, and Ethereum is still going to go down, and I believe that it's going to go and test down again to the 1,050 range, because that was where it was previously and then that's where it rebounded, right? But now we can see that it's coming back down to 1,050 should be the target for now. All right, so I hope that you guys have made profit for the market. I've been very consistent. I've been telling you guys my view, and hopefully that you guys have profited and make good money. All right, this is Cal signing off. Have a great day. Bye bye.